And sticking with earnings, Aisha spoke with the management at Page Industries on their quarter gone by as well, and quite a robust quarter at that. Listen into that conversation.
Hello and welcome to a brand new episode of India Revival Mission. And today we have a company which has managed to actually post its all-time high profit and revenues in a pandemic year. Please welcome me in joining on board Mr. Chandrasekar K, the CFO at Page Industries. Mr. Chandrasekar, hi, good evening. Good to have you on India Revival Mission. Just the ring of it, all-time high profit and revenues in a pandemic year. How does it feel?
Thank you so much. Good evening. Yes, it is an extremely good quarter for us. This is the best quarter in terms of revenues and profit in history. And the last time the best was about 835 crores in Q1 of FY20. So post-COVID, it is definitely extremely heartwarming to see this kind of performance. And obviously, this has come with a lot of hard work, with the front-end sales and distribution and the manufacturing and so on. So every bit of effort has paid off. And thanks very much for the acknowledgement.
Absolutely. Numbers speak for themselves and we go by data. But tell me, on an operational front, Mr. Chandrasekar, would you attribute this kind of a solid performance to cost optimization, or has demand in high margin segments actually seen a big jump?
It is a combination of many factors. As you know, it is never due to one factor. The top line growth, particularly in the athleisure segment, the outerwear segment is extremely good. The e-commerce has done well. The kids segment has grown as well. Not to forget the men's and women's innerwear, which are also our sort of bread and butter, and that is also growing, albeit a bit slower than the other categories at the moment. When you look at the cost optimization, a lot of the effort which we have put this year in Q1, especially with no visibility in sight when COVID hit us, we have done a lot of cost optimization on many fronts, including on factory overhead, selling and corporate overhead. That is paying off. And the third factor is obviously the better labor utilization and the absorption of costs. So it's a combination of many factors due to which we have recorded one of the best EBITDAs, also about 24.4% for this quarter.
Right. You know, it's a bit of a catch-22 situation that since we're talking about cost optimization, because while there is the gradual opening of businesses as well as economy, store rentals are coming down. At the same time, you're seeing raw material costs as well rising. What's your visibility on how is it that you can balance both ends, and how you'll manage to cost optimize even in the future?
We are a fairly efficiently run organization, even given by the past history that we have. But again, as I told you, COVID has taught us how we can look for further improvements in the way we manage our cash flows, working capital and OPEX. So that sort of tighter control on every day what we spend, and whether that leads to any improvement in business in terms of volume, is something we are more conscious of. So not that we cut down on everything that we need to spend. We have been paying all our employees. We haven't laid off anybody, and we have paid the outsourced workers also. So going forward, a certain watchfulness will always be there with respect to what we are spending and why. And that applies to all categories, including the efficiency of manufacturing labor, how many pieces do we produce. We also look at what is the discretionary spend in what we do. So this would be the sort of method going forward as well.
Okay. You sound pretty confident about how you're going to mitigate and try and balance both ends. Are you confident that you'll be able to sustain the margins, or would you say that there could be possibly a moderation coming in the near future?
We typically pitch for around 22% EBITDA margins throughout history. And as you know, every quarter the revenue is not the same. So due to sometimes lower or higher revenues, you could find an EBITDA which is on either side of 22%. And that is how history has been, excluding Q1 of this year. So we aim for that. And some of the quarters when the revenues are high, we do get higher margins. Some quarters are lower. So 22% is something which we price to get inflation plus in every year. On an average, if you take a full year of all 4 quarters, 22% would be the kind of margins, EBITDA margins we would like to work with.
Sure. Wanted to understand what is your own, observation as to how the trends within consumers are panning out. Is it still the traditional sales which you're seeing, physical sales, or would you say that there is a massive shift to online? Because now in the post-COVID world, just about everything is happening online, from the food we eat to the way we live to the way we communicate and buy things.
I will not say there is a massive shift to online. Yes, in the initial days, say in Q2 when we started getting back into business slowly, e-commerce was sort of very high. But overall, e-commerce is about 8% of the business we did in Q3. It is significant. It has grown, a healthy double digits in Q3. But at the same time, it is one of the channels that we do. And we still have distribution. We still have the multi-brand outlets and the exclusive business outlets, the large format stores like what you see in the malls. So we have almost 72,000 plus MBOs, now 870 EBOs, and about 2,200 stores in the large format. So there is business which happens there, and it is, as you can see, it is more than 90% of what we do. So the demand has been robust in all those channels.
That's good to hear. Give me some more color now that malls are opening up. How are the large format stores doing? Are the footfalls gradually coming back anywhere close to pre-COVID levels?
Of all the channels, I would say the large format stores are still lagging. They still need some more time, maybe possibly Q4 to get back to their best. The footfalls are improving, but I would say LFS can do much better than it is at the moment.
So what would you say, Mr. Chandrasekar, would be a sustainable range of volumes if you could just put it in numbers?
We have, you're asking about the number of pieces. In terms of volume, we have done 48 million this quarter. And if you're asking about growth, we always pitch for more than double-digit growth in the volumes. It happened this quarter. It could be much more than that because we are operating in a hugely under-penetrated market in the premium segment, which itself is a very small fraction of the entire innerwear and apparel business in India. So with the premiumization, I think the volume growth, I would say, will be as good as we can handle in terms of throughput.
That's great to hear that. So can we say that Page's narrative of being economy and competition proof still stands? Because there is a faction of the market which is concerned that the long streak of market share gains may actually snap. Do you think Jockey can sustain market share gains it has consistently, clocked since the inception, given the increased competition?
So we don't, in terms of the market we operate, we don't speak in terms of market share. Because if you look at the men's innerwear, it is in the range of about 12,000 crores as a market. I'm including premium economy, everything. It is estimated to be. These are some studies which are available. Women's innerwear would be double that size, roughly about 21,000 crores. athleisure or outerwear would be about 65,000 crores. And the kids alone is estimated to be at least 85,000 crores. So you're talking of a market which is 1,86,000 crores. And when you segment this market into economy and premium space based on the income group classification, the premium market is only around 12-13% of that market, which is about 25,000 crores, and Page is doing about 3,000 crores in a year. So the Page being the dominant player by a huge distance in terms of volume, reach, number of outlets, by whatever measure that you take, Page has got about 12% penetration in the premium market. But if you add up all the premium players' declared results, it doesn't add up to 25,000. So the premium market itself has a large potential to grow. And therefore, it is not a question of market share or competition, but how this value for money premium proposition is continuing to bring in more and more customers, both from the economy space and in terms of the growing categories like kids. So the market is quite attractive, but we have been in this business for 25 years in India, and it has been a slow and hard climb. We have learned, we have unlearned, we have relearned many things, and the business model that we apply is beneficial and profitable to all stakeholders, including our vendors, channel partners, including our outsourced manufacturers, and everyone. So it has taken quite some time to shape up how do we want to do business, and how is it in the best interest of our consumers, which is value for money, premium international quality apparel. At the same time, is this commercially profitable for everyone in the value chain? You may or may not be knowing that we employ close to 20,000 people. 80% of them are women in many of the manufacturing units in and around Karnataka. So there are a lot of people who depend on this company, and we carry all of them along.
That's indeed quite a noble way of going about things. And we'll definitely have another discussion centered around this particularly. But I'm very tempted, Mr. Chandrasekar, to ask you whether you've switched to athleisure or not, because that really seems to be the choice for everyone still working at home.
My wardrobe is full of athleisure. I'm not able to use all of them. And of course, nowadays, athleisure is the norm.
Okay.
In many of these IT circles in Bangalore, you find people coming to work in athleisure. So athleisure is something which is adopted by in India, and it is growing quite rapidly. You can merely see this by the number of players who come into this space. If you go into a mall, you will see the number of people who offer athleisure, number of brands which have come in.